Hello everyone and welcome back to Explain the Charts. Today is October 22nd, 2025, and we are doing a deep dive analysis of Litecoin or LTCUSD. The past couple of weeks have been an absolute whirlwind for Litecoin, filled with incredible hype, massive gains, and a brutal, gut-wrenching crash. We're going to unpack all of it, starting with the major headlines driving the sentiment and then jumping into the charts to see what the price action is telling us. The big story, of course, has been the intense speculation surrounding the approval of a spot Litecoin ETF. Around October 10th, we saw a flurry of articles from sources like Benzinga and CoinJournal highlighting a major surge in LTC's price, with some reporting gains of 10 to 15% in a single day. This rally was driven by the widespread belief that an SEC approval for ETFs from firms like Grayscale and Canary Capital was imminent. Polymarket data even showed approval odds skyrocketing to 95%, fueling a wave of bullish momentum that bucked the trend of Bitcoin and Ethereum. Analysts began throwing out incredibly bullish long-term price targets, suggesting Litecoin could be a sleeping giant on the verge of a breakout to $400 or even $750. But, as we often see in crypto, what goes up can come down, and it came down hard. On October 11th, AMV Crypto reported a devastating 23% plunge in Litecoin's price. This crash erased the ETF-fueled gains and triggered a cascade of liquidations, painting a much more bearish short-term picture. That same article noted that if LTC fails to reclaim the $105 level, we could see a further drop towards the $76 support zone. So we have this major conflict in the market, extreme long-term bullishness pinned on an ETF, versus severe short-term weakness and fear after a massive sell-off. Now, let's look at how this all played out on the daily chart. Looking at the broader picture over the last year, we can see Litecoin has been no stranger to volatility. Notice the massive run-up in late 2024, where we peaked just shy of $150 in early December before a sharp rejection. We saw similar powerful rallies in January and February of this year, each time pushing towards that $140 resistance area before being pushed back down. Now let's zoom into the most dramatic event in recent memory, which perfectly correlates with the news. On October 9th, you can see this strong green candle pushing the price up over 6% to close near $126 on pure ETF hype. But then, on October 10th, we have one of the most brutal candles I've seen in a long time. The price opened at nearly $126, spiked to a high of almost $136, and then catastrophically flash crashed. Look at this enormous lower wick that went all the way down to about $55. This represents a massive liquidation cascade where selling pressure momentarily wiped out nearly 60% of its value from the day's high. While the price recovered to close at $97, this candle represents extreme trauma in the market and established a huge pocket of overhead supply. Since that crash, the price has been attempting to find its footing. We can see a clear support level forming around the $90 to $92 area, which has been tested multiple times in the last week and has held up so far. Immediate resistance is found at the recent swing high around $97 and more significantly at the psychological $100 level, which also lines up with the close of the October 13th candle. A major resistance zone now sits between $102 and $105, which was a key support level that was broken during the crash. Any bullish continuation would need to decisively break and hold above this $105 area. The bear case is that this consolidation is just a pause before another leg down. A break below our current support at $90 would open the door to retesting the lows from earlier this year, around $84. Below that, the $76 level mentioned in the news becomes a very real possibility. Let's switch to the 1-hour chart to look at the price action in early October, which set the stage for the later explosion. Here we can see Litecoin building momentum from October 1st to the 3rd. It started this period around $106, climbing steadily in a clear uptrend. The price pushed through resistance at $112 and eventually reached a high of nearly $125 on October 3rd. This initial move was a precursor to the larger, more explosive rally that followed a week later. It shows that buying pressure was already building in anticipation of the ETF news cycle. However, after hitting that $125 peak, the price did pull back, showing that sellers were still present at those higher levels. Now, let's zoom all the way into the 15-minute chart to analyze what's been happening in the last few days, since October 16th. This time frame gives us a granular view of the current battle between buyers and sellers. On October 16th, we saw a sharp drop from $92 down to a low near $89.50, establishing a short-term support level. The price then spent the next couple of days, the 17th and 18th, grinding its way back up, eventually reaching a high just below $95 on the 19th. Since hitting that high, the momentum has been mostly bearish. We can see a series of lower highs and lower lows forming a clear downward channel over the past 48 hours. The price tried to rally on October 21st, pushing up to about $97.30, but was aggressively sold off, bringing it all the way back down to the $92 range. As of right now, we are trading around the $92.50 mark, sitting just above a minor support level. The immediate resistance on this time frame is at the recent swing high of $93.80, and then more significantly at $95. If we lose the $92 support level, the next stop would be the lows from last week around $89.50 to $90. The short-term trend is undeniably bearish, but we are approaching a key support zone where buyers might step in. So, let's put it all together. What is the case for being bullish on Litecoin right now? The number one reason is the spot ETF catalyst, which the market believes has a very high probability of approval. If approved, it would open the floodgates for institutional capital and could easily send the price back to test the recent highs of $130 to $140 and beyond. Bulls will also point to the fact that the price has successfully held the $90 support level after the massive liquidation crash, suggesting dip buyers are active. What about the bearish case? The primary concern is the massive overhead supply and damaged market structure left behind by the October 10th crash. Any rallies are likely to be met with selling pressure from those who bought at the top. A delay or, in the worst-case scenario, a denial of the ETF would almost certainly send the price tumbling, breaking the $90 support and heading for those lower targets of $84 and $76. The failure to reclaim the $100 to $105 resistance zone is a major sign of weakness for now. To recap, the most important price levels to watch are key support at $90, followed by $84. Our major resistance levels are $97, the psychological barrier at $100, and the critical zone around $105. Now for some potential scenarios, keeping in mind this is not a crystal ball. Scenario 1. The bullish breakout. Positive news on the ETF front acts as the catalyst. We see a strong break and hold above $105, which could quickly lead to a retest of the $125 to $135 area. Given the market sentiment around the ETF, I would place the likelihood of this happening in the coming weeks at around 60%. Scenario 2. The bearish breakdown. The ETF decision gets delayed, or negative regulatory news hits the market. We lose the $90 support level, and sellers push the price down to test the $84 and potentially the $76 support levels. I'd give this a 20% chance. Scenario 3. The sideways grind. No significant news arrives, and the market remains in a state of indecision. In this case, Litecoin would likely continue to chop back and forth in a range between $90 and $100. This also has about a 20% probability. The main thing to look for is any official announcement from the SEC regarding the Litecoin ETFs, as this will almost certainly be the trigger for the next major move. That's all for today's analysis on Litecoin. Please remember that this video is for informational purposes only and is not financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to Explain the Charts, and let us know what you think in the comments below. Thanks for watching, and we'll see you in the next one.